Welcome to Common Sense Investing. My name is Cameron, and you're here for another Monday evening live stream talking about microcap stocks. Nice and relaxing day, week to talk about microcap stocks. Why? Because there's not really a whole lot going on, right? I mean, we are sitting in between Q2 earnings season, which is now pretty much wrapped up for every company that I follow. Q3 earnings season is now a couple months away. We are 2 weeks away from the Small Cap Discoveries Microcap Stock Conference in Vancouver, which starts September 29th. We are 5 weeks away from the Planet Microcap Conference in Toronto for microcap stocks on October 21st. So the next couple weeks, really kind of a quiet time in microcap stocks. And this is a fantastic time, number one, and what I'm doing right now myself personally is researching stocks. I have committed on my Patreon and Substack to basically research one stock every day this week, find hopefully one or two good new companies to present to this channel in the future. And so far I have been doing that because this is just, these boring times are really, it's interesting where the boring times are really when we should be making money as microcap stock owners, not because the stocks are going up, but this is when we do the research. This is when we put in the time. This is when we build the conviction. This is when we buy the positions so that when stocks go up in the future, we get another bull market, we get good earnings, we own the right stocks, right? This is the time to do that. But it's also a good time where I'm going to talk about today is some microcap stock investing strategies. And not a lot of people talk about this, right? That's why this video is basically let's discuss microcap stocks. I don't discuss it very often because I don't normally get the time. So I like this little thumbnail here with a guy with a duct tape over his mouth because this is not something that we normally talk about. Is let's just talk strategies and opinions. Because I am going to talk about microcap stock strategies and opinions, keep in mind that this is not financial advice. I'm not your financial advisor, and I mean this. I don't know anything about you, how much capital you're working with, your experience, your risk tolerance, or anything else. So this is just a channel where we're communicating, talking about microcap stocks. Maybe people learn, is this something that I want to do? But this is definitely not a solicitation to buy, sell, or hold any of these stocks. This is how I invest and not how to invest. What a great year so far. It's been up and down. It's been volatile. Now, as usual, as I go through this presentation, I have a presentation to start. 30 minutes usually I talk for, going through what I need to talk about here today. And then I'll stick around for another 30 minutes for questions, answers, anything else you want to talk about. This is your time once I get through this. And what am I talking about today? As far as strategy, I mean, why not? Why not? If I'm talking microcap stock strategy, why not talk about Ian Castle and Paul Andreola? And a couple of comments here from their X posts. Basically, 65% of global equities are microcaps. Unless you're a rich billionaire, everyone should love microcap investing, but no research coverage, no one to blame. You must do the work. You will lose money as you learn, but independent, self-confident people love microcap investing. I absolutely agree. I don't know if everybody has seen this. I did an interview on Value Bridge podcast. This is a terrible picture of me, but I kind of like it because I am looking over here at Jordan Belfort. And this interview was talking about the Wolf of Wall Street versus real penny stock investing today. And the interviewer, again, is not a microcap investor. So usually when we talk about microcap stocks with your average investor who's investing in, mid-cap, large-cap, Teslas, Microsofts of the world, when you talk about microcap stocks, they think penny stocks, they think Wolf of Wall Street. And I had a fantastic conversation here talking about how this is still true and how this still exists in the microcap world today. There are scams, there are promo stocks, but also why specifically I completely agree with Paul Andreola here, who says that retail investors have significant advantages over large institutional investors, yet they rarely use these advantages. Basically, Ian Castle and Paul Andreola and myself on this podcast here with Value Bridge are saying the same thing, right? Microcap stocks are where retail investors should be investing, and that, yeah, you're going to lose a little bit of money as you learn, but eventually you're going to realize that as a retail investor, you have significant advantages in this space. Once you figure that out, gain some experience, build a strategy that works for you. This is typically the space where people build wealth, right? This is what I'm talking about. Now, part of what I will discuss was that Paul says here, yet they rarely use this advantage. What is Paul talking about? Well, I am not Paul Andreola, but I can at least infer what I think, in my opinion, Paul Andreola is talking about here with microcap stocks. And we'll get to this, where this is my investing thesis. I think it's pretty standard now. I've seen kind of the same thing talked about by many microcap investors, but I research a stock, I build a thesis. Sometimes it takes me a long time. Sometimes I'll build a thesis pretty quick. If it's a stock that has a lot of good indicators that I like, I buy a position. I think there's a common misconception with microcap investors that we're either all in or we're all out. And when I buy a position, it's a huge position and I'm really pot committed. It isn't. Sometimes I've literally bought one share of a company just to start tracking it, right? So buying this position does not necessarily mean buying a large position. It depends how much research you've done. And then over time, as inputs come in through earnings, through news, through macroeconomics, through the industry sector going up, down, tailwinds, headwinds, whatever, inputs. As the inputs come in, we reevaluate or evaluate the thesis. But what is not discussed as much, I think, in microcap stocks is this here. When Paul Andreola says that we have an advantage that most other institutions do not have. Us retail investors have an advantage. In my opinion, what Paul is talking about is the ability to buy, trim, or sell a stock. As your average investor, as your average retail investor, if you're putting $1 million into, especially a lot of money, if you're putting a lot of money into a microcap stock, it's really hard to buy it, sometimes impossible to buy it. That's why institutions aren't always in the microcap space. It's really hard to sell it. You can't buy the stock without driving up the price. You can't sell the stock without driving down the price. However, if you're a smaller retail investor, you're investing a few $1,000s, right? You can buy, you can trim, you could sell whenever you want. This is our option. We can literally buy a stock one day, sell it the next day, and buy it back the next day. If something changes, if this thesis changes, if our risk tolerance changes, if there's earnings coming up, if there's something that you're nervous about, we could sell. And if that nervous thing does not happen, we can rebuy the next day. This is definitely an advantage that microcap investors have. Now, another advantage is that moving money around, this is kind of not the dream, but this is kind of the main goal. If I was educating new microcap investors, basically not all of these are going to be winners. That's one of the major differences between microcap stocks and large cap stocks is you get a lot more volatility. You will get a stock like this number 4 stock right here, and maybe it's down 50%, maybe it's down 100%, but I definitely encourage the use of stop losses, where if you pick 4 different stocks, you might end up with one loser. And if you limit the loss from that one loser, then that is the best way to manage a portfolio. Now, in your other 3 stocks here, you might get one that does nothing. It's a little bit disappointing. You might have one that goes up a little bit, 25%. That's not bad. And if you put in the time, you put in the research, you put the work in, and you find that really good stock, you're going to find one that goes up at least 100%. And in the microcap space, I could show you there's been dozens and dozens and dozens of stocks, even in 2025, that have gone up a minimum of 100% year to date. So this is the potential, and this is potentially even low. And if you invest in these 4 stocks, basically what you're going to end up with is a 25% gain. However, the other thing with microcap stocks, again, when Paul is talking about there's an advantage that we have that we rarely use. Again, in my opinion, I think he's talking about the movement of money. So what you get is people that end up holding on too long, right? You get this People don't use a stop loss. If this stock of theirs goes down 50%, 60%, then all of a sudden these 25% gains are out the window. But if you utilize a stop loss and if you reinvest some of this money from these losing stocks, definitely this one and potentially even this one, and you reinvest that cash into some of these winning stocks, maybe you even find the ability to add a little bit more cash, like from your personal life, to reinvest in these winning stocks. And all of a sudden, as a microcap investor, you're going from a 25% gain to potentially how much higher you can go, right? So when I'm talking about strategy, this is kind of the basic strategy, right? Do your research, put in the time, make sure you have a stop loss, find these winners, and you will do okay as a microcap investor. But if you can learn, if you can use that advantage that Paul is talking about to buy, sell, trim, to move that money around as a small retail investor, and bail from these losing stocks and reinvest in the winning stocks, you know, there's no telling how much higher you could bring these portfolio wins up. So in my opinion, it's that ability to buy, trim, or sell in small quantities without moving share price that is really a huge advantage for microcap investors. One example of this for me recently, personally, right? Q2 earnings, right? I said that Q2 earnings season this year really was here to gather information to inform the rest of the year. And the reason is we kind of knew a lot of companies were saying the back half of 2025 was going to be strong or return to normal. Well, the back half of 2025 is not Q2, right? We were expecting some kind of weak Q2 earnings this year. And I was saying, don't trade Q2 earnings because they're not strong. Issues of trade, tariffs, contract delays, shipping delays, slower decisions being made, inflation, wage inflation, higher expenses for everything with no guarantee of consistent revenue or gross profit gains. One of the problems that people had, I think, this Q2 earnings season was we did have a couple winners right out of the gate in Zoom Technologies and D-Box. And I mean, it's probably pretty small, but this is Zoom Technologies earnings right here. And they were exceptionally good. And of course, the share price absolutely rocketed up. So once people saw Zoom report a very good Q2 and share price rocket up, everybody thought that they were going to trade or buy before Q2 earnings. Overall, though, that has been a mistake. You really have to accept that risk where if you're buying a stock into earnings, you need to be willing to hold that stock and have that conviction if you're wrong. And we already knew that Q2 earnings was going to be weak for a lot of companies. Not picking on them here, but this one's Mind Technologies, right? This is their earnings right here. Q2 earnings absolutely fell off a cliff. Just one example. Here's another one here, ADF Group. People were hoping, crossing their fingers, expecting good results. Results weren't bad. Backlog was way up. But I mean, you know, the revenue was down and of course, absolutely fell off a cliff on their earnings right here. Just one more example. Right, Covalon Technologies. It's been a while since Covalon reported, but you could see people getting excited about Q2 earnings before the earnings came in. You know, peaking up here, absolutely stunning. This in microcap stocks, this is not an institution. This is not an algorithm buying stocks at this type of price right here. This is a human being who bought shares at this high share price. Reporting earnings right here, Covalon has been nothing but down, and it's been several weeks, even a month since Covalon reported earnings, Q2 earnings, and they just keep going down, 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 down. So again, if you're going to buy into earnings, you really have to accept that risk where if you're wrong, then, you know, you could be holding for a while. This is NTG Clarity Networks. This one was really too bad. This was such a nice technical setup. I told people about this. People were getting excited, just like Covalon before earnings. You see that big spike up right here. Earnings come out, and yeah, it's been nothing but just like Covalon, down, 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 down. Not just a crash on earnings, but a significant trickle-down effect after earnings. So, I mean, what am I talking about here? As far as the advantage that we have as retail investors, if you're a large investor you really have to accept this risk. If you own $250,000, $500,000 worth of shares of NTG Clarity Networks going into these earnings, you do not really have the ability to sell, and maybe even a limited ability to buy, where you see a little bit of buying can drive up share price. And if you go sell to de-risk this position, then you can drive down share price without even worrying about earnings. Because when you hold that many shares, it's just the reality of the situation in microcap stocks. But for your average small retail investor, one of the advantages that we have is to de-risk. If you're concerned about earnings, you have the ability to sell or trim right here to de-risk your position, see what the earnings looks like, and then make another decision. And for people that were able to do that with a stock like NTG Clarity Networks, I mean, you're selling here at $2, $2.15, $2.20 Canadian. And right now, if you still like the company, you could be buying those shares back for $1.65 Canadian. That is an absolute huge difference. Now, I know the argument here, Cameron. Okay, so NTG Clarity Networks crashed on earnings. Not all stocks are like this. Sometimes, what if they reported good earnings? This was a pretty good setup. If NTG Clarity Networks had reported really good earnings, there was a chance that their share price would rocket up. I completely agree with that. But again, if we go back to one of the more successful stocks this year, which is Zoom Technologies, this is their earnings right here. This is where their share price was on earnings. Yes, share price did rocket up. There was a chance to buy shares right here. They offered that chance, I think it was for a day or two. Share price was still at a pretty low level. So you have now seen earnings come in. You know the risk, you know the potential rewards, you know what the numbers look like. Completely de-risk, completely de-risk. You have now seen earnings. And instead of buying here, you only have to buy here. And then, of course, anywhere along the lines, you could tell share price is just significantly up from there. So typically, a lot of people say, well, I have to buy ahead of earnings because if I don't and they have a good earnings, then share price can rocket up. Well, Zoom Technologies is simply one example where you can wait for earnings, watch the earnings come in, buy the stock when the earnings are good, and really all you miss out on is this little rally here, and you still capture all of these future gains that Zoom share price has been reporting ever since their Q2 earnings. And congratulations to Zoom Technologies shareholders. So at the end of the day, when we're talking about microcap stocks, I completely agree with Ian. I completely agree with Paul. And if I have to speculate on what Paul is talking about here, they rarely use this advantage. I hope I've made it clear what I think that advantage is that Paul is talking about, and that is the ability to buy, sell, or trim or hold a stock. As a retail investor, you can move money around a lot easier than some larger investors. And no, it's not trading, it's just being smart with your money. Jeremy here says that Paul was talking with his friend Howard. Only 9 of 42 small cap discovery stocks show up on Howard's screens due to low institutional interest in the other 3. Absolutely. And that's not only institutional buying, that's just showing up on the screen, right? 9 of 42 stocks showing up on the screen for institutional investors. That doesn't mean institutions are buying those 9 stocks. So it is amazing how, what percentage of stocks, and if we could find those stocks before the institutions, and then they do start popping up on the institutional screens and they do make the decision to buy, that's really when we can see share price go up. So for me, having these advantages as a retail investor is absolutely key to making money in microcap stocks. Let's see here. I'll answer this one in a bit. How many microcap stocks do you recommend to own? I'll go through one more presentation here and then I'll answer that question. Here's another one from Ian Castle. right? So we've got the amount of work you do on an investment often correlates with the amount of volatility you're willing to endure. It isn't a stairway to heaven. It is a roller coaster. Very true, right? Most microcap stocks are kind of like this, right? This is absolutely one of the best ways to make money in microcap stocks, in my opinion. I do research on a stock. I build conviction on a stock. I figure out where I think it should be in share price. And then when it dips, when it drops in price, that's when I buy, right? I am not a fan of price targets. At the same time, I think investors should have a ballpark price target sometimes, even if that price target is just, it's worth more than this. And especially for new investors. It does get frustrating for me because microcap stocks are volatile. They are volatile. That is why they are not a stairway to heaven. You get share price like this, lumpy and all over the place, because sometimes you get earnings like that, lumpy and all over the place, right? You earn what you get, or you earn what you give. And so price targets and modeling of price targets is very hard to do. But I do typically suggest you have a ballpark share price. And I'll give you a few examples here, right? So this is CorMedix. And I'm not using this as an example to pat myself on the back, right? But CorMedix is a stock I disagreed with the market with. It was down 18% on earnings. I 100% disagree with the market. Investors are getting distracted by the acquisition, forgetting about the financial fundamentals, incredibly profitable with $49 million of operating cash. I didn't really have a hard price target on CorMedix. To this day, I still feel like they're roughly, very roughly, around a $15 stock, USD, right? Maybe somewhere 14 to 16, again, very rough. I don't need to spend hours and hours and hours and hours of my time modeling out that perfect price target that I will never get absolutely correct. When I bought shares of CorMedix, I bought at $9.75 on this share price crash here after earnings, and I bought at, I think, $11.65 on this share price crash here after they announced the closing of an acquisition. I simply had to do enough research on this company to determine that I roughly think it's worth about $15, and then I took the opportunity twice to buy the share price crash and disagree with the market because I put in that work and I determined that conviction. And while this one isn't up significantly yet, I still have the opportunity. I think it should be up a little bit higher personally. But I mean, this purchase here is definitely making me money. So that's just one example where having that price target, having that conviction and doing that research and doing that work can help make you money in microcap stocks. Of course, this is another huge one for me. Very rough. Again, I'm not saying $10.21. I'm not saying $11.49. I'm not spending, a week of my life to determine a price target that will be wrong. I have a very rough price target in my head. I think Mind Technology here is probably around a $10 to $11 stock. Their latest earnings was a little bit weak. Maybe I'll say $10 right now instead of 10 to 11. But either way, again, with Mind Technology, even with this rough price target of $10 to $11, I was able to buy it at under $4. I didn't time the bottom here perfectly. I bought it up here at $7 and something, and then I bought it here at $8 and something. And then when it did reach over and above my price of $10 to $11, when it did reach here up to $11 and it did reach here up to $11, I was able to trim. I made that decision to use that advantage that Paul Andreola was talking about, where I actually trimmed some of my position in Mind Technology here and was able to buy back at a much cheaper price here. And again, I trimmed some of my position here in Mind Technologies. And if share price keeps going down like this, I may consider adding back that position again somewhere down here. So this is just one more example where I do enough research where I can disagree with that market and purchase when other people are selling. And I think that is very important to microcap stocks. Now, we do have to be careful. We do have to be careful because this doesn't always work. You can be wrong, and this is one of the harder things for new microcap investors to learn. Everybody is scared on those share price drops that you are not catching a falling knife, right? You have to watch for that sunk cost fallacy. basically I put in the work, I built this position, I've earned it, I know I'm right. I'm not going to let anything convince me that I'm wrong, and I'm just going to keep buying and buying and buying, even though the market completely disagrees with me over and over and over, and share price keeps going down. And that illusion of control, we're thinking that all that research is going to tame that volatility. Sometimes that does not work. You have to be humble in microcap stocks. You have to be willing to admit that you were wrong, but when you get it right, I still think it's worth the occasional time when you get it wrong, because you will make a lot of money buying when other people are selling. And this is one of those occasions where I can admit humbly that I was wrong. This is ADF Group, drx.to. Share price went here all the way up to $20.50 Canadian. Share price was dropping. I saw this little point in here where it started to level out, and I started to get pretty excited about ADF Group. And I actually opened my first position in this company at around $13. And then I was so stubborn in my research saying that this was a good company, I bought more at around $12. I bought more at around $10. I bought more at around $8, and it went all the way down to $5. Right? So you do not always get them right. I think I was somewhere between here and here, I think, for ADF Group. Now, good news is this company does have a chance to rebound, assuming Canada and the United States ever rebuilds their relationships. And they are actually building some pretty good Canadian contract backlog up here, especially with their latest acquisition. So I think it will eventually go back up in price, and eventually people will be making money on ADF Group. But that is one example where I myself have fallen prey to catching a fallen knife. In saying that, I do think through some of these other examples, you can't let that one stock that you get wrong scare you away from all the other stocks that you get right. Now, what was one of the questions? How many microcap stocks do you recommend to own? How much time do you have? That's my answer to you. And again, without knowing you, without the financial advice, I always see this from people. Well, I should own 20. Do you really have the time in your life to research, build conviction, buy and own 20 microcap stocks just to have that diversity? Do you have the time to do maintenance due diligence on those 20 microcap stocks? Realistically, that takes a lot of time, because again, we said this up here through Ian Castle, saying that you have to do the work, right? So people can't do the work for you. You simply can't go on to Seeking Alpha and look up stock opinions and read articles and have people tell you whether or not it's a good stock or not. You have to build your own conviction. So my answer to how many microcap stocks you should own is basically how much time you have, how much work you're able to put into microcap stocks. Look, if you only have time to actually honestly research one microcap stock, you just want to have fun with that one microcap stock, right? Put the rest of your money in a nice safe index or with a financial advisor and just invest in one microcap stock. As a more professional microcap investor myself, I say that I range from usually between about 10 to 25 stocks, depending on the market. So in bear markets, I tend to circle the wagons a bit. I'll sell a lot of my more speculative stocks. In truly bear markets, I'll typically only own about 10 stocks. But during bull markets, I like to capture the various upside potential of different stocks, and I'll build more positions and I'll own more different stocks. And so in bull markets, I'll tend to own more stocks, and in bear markets, I'll tend to own less. So I own personally usually about 10 to 25 stocks. Okay, so here's another chat from Ian Castle, right? You can borrow someone else's stock ideas, but you can't borrow their conviction. This is what we're talking about, right? How many microcap stocks should you own? Holding winners is difficult because you keep looking back at your cost basis instead of looking forward at the business. And this is based on an article that was written by Ian Castle in Microcap Club. You need to do what others don't. The hardest part of achieving 10 to 20 baggers is having the patience and conviction to hold through multi-year periods of underperformance. Patience is your biggest asset when investing in a great business. And that's probably key right here, right? Great business. not miscellaneous stock, not patiently waiting on hope and luck that the stock is going to succeed someday, right? Not ignoring all the facts and all the stagnation and the lack of execution and just hoping something will change, but actually having patience on a good business. And that's kind of key here. Because, you know, again, I like looking at these examples. This is NTG Clarity Networks. This is one of those stocks. This was 2021, right? Most stocks were absolutely skyrocketing up in 2021. NTG Clarity Networks had a little bump up, not too bad. Shareholders made a little bit of money. And then for years, they did nothing. And then all of a sudden, absolutely rockets to the moon exponentially, right? So that's one example where patience paid off. Here's another one, Tornado Infrastructure Equipment. Again, 2021, 2020, this is when stocks were rocketing up. I can't imagine how frustrated shareholders of Tornado Infrastructure Equipment were when every other stock on the planet was going up and theirs was doing very, very little. You know, basically then from 2021 to, you know, early to mid 2024, they did absolutely nothing. 3 years of nothing. And then all of a sudden, look at this beautiful shoot up, bench for a while, shoot up again, share price of $1.91, all the way up from, what is this, 20 cents during COVID? That's massive life-changing returns. So that was patience. It is interesting to see investors with that type of patience because even on my videos, I have been saying I've almost written off 2025 at this point. I am excited about a few different stocks, just a couple during the Q3 earnings season and the investor fall conferences coming up. I have my favorites picked out for these, but ultimately right now, what I am excited for is 2026 because 2025 has been a bad year. Right? So I think if the economy can normalize a little bit in 2026, I think a lot of companies that struggled this year are going to report unusually high numbers next year in 2026 because their 2025 numbers were so bad. And even though I'm excited for 2026, I do know some people that are simply not patient enough to wait those 12 months to get great returns in microcap stocks, right? They're too frustrated. We've had a bad market at times this year. They're out. So patience is an interesting thing. I completely agree with it. Now, in saying that, I will say some things I disagree with. I do say that you can borrow someone else's conviction for a little while if we're talking about trading. I absolutely can borrow conviction. If I see a stock is popular and I see people say and give me good reasons why they're going to have a really good Q3 earnings, and I think I can buy today, hold for a month, make a 20% price gain, I absolutely can borrow that conviction for a small amount of time, right? That doesn't, I can borrow it for a few weeks or a few months. I can easily buy and hold a stock for a short amount of time if I can get enough conviction from other people, from somebody else's work. I can build that conviction for a very short amount of time. Not for a long amount of time, but for a short amount of time. And that's a big part of identifying whether you're trading a stock when you own it or whether you're investing in a stock when you buy it and you're the one doing the work and you are hoping to hold a winner. So it's very important to clarify whether or not you're trading or whether you're investing in a stock. But here's the thing, with having this patience that Ian Castle is talking about, right? Opportunity cost is the thing. Opportunity cost is the return you forego by choosing one investment over your next best realistic alternative. The quick math here is if you hold stock A for 3% while stock B at the same risk level would have paid 12%, your opportunity cost is 9%. Or when you hold cash, when you can buy a dividend ETF if you're going to hold that cash for a while and it pays 5%. Your opportunity cost here is 9%. Your opportunity cost here is 5%. This money adds up. So when I look at a stock like NTG Clarity Networks and I look possibly at what I would have done, the longest I typically will hold these stocks, and this is just me personally, is around 12 months. I simply do not agree with Ian Castle enough that I am going to hold for this amount of patience. I do not have this patience in me simply because of opportunity cost. And again, I think it comes back down to that clarification that Ian Castle gave, where he said great business. I do not think, just for one example, that NTG Clarity Networks was necessarily a great business in 2021 or in 2022. I think where a company, just for example, NTG Clarity Networks changed was in early 2023 when they reported their full year audited earnings. This is when I started noticing that this company was becoming a great company. They were changing, they were inflecting, and it only took a little under, well, basically 12 months between reporting these audited 12-month earnings in 2023 and reporting these audited 12-month earnings in 2024 when the stock really started to rocket up. So personally, myself, 12 months is about the longest that I will wait for a stock. I simply don't have enough patience to wait for that long. The other thing I will say is that I don't think we have to anymore. I think when you get these good companies, these good microcap stocks nowadays, if they truly are good, growing and profitable or close to profitable, some inflection point coming up, these new stock screeners out like Portfolio 123, I think companies' stocks are going to get discovered a lot easier than they used to in the old days. So when I look at this again from Ian Castle about borrowing somebody else's conviction, holding winners is difficult, do what you need to do that others don't, and being patient, having patience as your biggest asset when investing in a great business. I do want to clarify here that he is saying great business and how important that is. And at least myself personally, I do not. Patience for me is 12 months. I simply will not hold a stock for longer than that if they're simply not executing, if they're not that great business that I thought they were. So that's where I'm at with that one. Let's see here. Answered some questions already. That's good. Now I got time to do one more here. One more? What do I got? One more, and then I can shut her down. It's amazing what you can accomplish if you do not care who gets the credit. Now, this is an interesting concept for me. These days, it seems like, again, the stock screeners are getting a lot of the credit. People are finding a lot of stocks through the stock screener. But I will say that personally myself, for microcap stocks, despite more and more people using stock screeners, I am still a bit of a fan of word of mouth. And I completely agree with this statement here from Ian Castle. You know, and this is a plug for his network, Microcap Club, of course. And I mean, shout out to them. This is a great platform for Microcap Club. I basically try to form my platform similar to theirs, just smaller and cheaper for new investors, right? That's basically what I do. But this word of mouth, this communication, discussing these stocks is still, I think, personally, in my opinion, the absolute best way to find the best microcap stocks. So whether you're joining Microcap Club, whether you're joining Small Cap Discoveries, whether you're joining my platform or any of the other fantastic microcap platforms out there, I do still think this is an absolutely fantastic idea to be able to talk to other microcap investors. And why do I say that even this year, right? It's because two of the best stocks in 2025 were not discovered by me personally, right? It's actually rare on my channel that I even discover my own stocks. Typically what I get is people that follow me, people that are on my platform, recommend stocks to me. I do the research and go, yeah, that's a great stock, right? And then all of a sudden I make a video on it. It's supposed to be my stock, but it's not necessarily my stock. This is one example right here, Zoom Technologies. I've been talking about Zoom Technologies since they were about a 16-cent stock. They're now currently up to about $2.30. This was introduced to me by the Microcap Contrarian back at like 8 cents or 10 cents or something like that. So this Zoom Technologies was not found by me using a stock screener. It was found by hard work and word of mouth. Right? This is another one here, D-Box Technologies. Did not find it on a stock screener, did not find it through brunt force going through the earnings of all 3,000 microcap stocks that I follow. This was basically popped up on my YouTube channel from Nitin K Invests right here, right? And he introduced me to this stock right around here. And of course, it's been an absolute winner ever since. So word of mouth. I do love the stock screeners. However, I do think that there's a lot of egos out there in the microcap stock space. And it's not so much about, claiming title to a stock. Well, I found this stock. Well, I found this stock. This is my stock. It's my stock. I want to avoid that guy's stock. It's all about just making money. And I completely agree with Ian Castle here. Do not care about who gets the credit. It does not matter. All that matters is making money. I think a lot of microcap investors would benefit from putting their ego to the side. I still like the stock screeners, but I definitely suggest, especially for any newer microcap investors, join a group, join a platform somewhere, make sure they're good investors, have those conversations, and you will learn a lot, right? And then finally, to summarize it, I do love this final mental exercise here from Ian Castle, just to close out this presentation, clean slating. Because one of the things with investing in general, but I feel like it gets profoundly exemplified in microcap stocks, is a lot of the investing psychology problems or mistakes that people make. When you make a mistake in large cap stocks within investing psychology, like social proof or herd investing, where you're just doing what other people are doing and you're not thinking for yourself, if you make a mistake, you might be down 3, 4, 5%. If you make a mistake in microcap stocks, you can be down 30, 40, 50%. That's a lot different, right? So we have to be very aware of these investing psychology mistakes. And I do really like the concept here from Ian Castle, basically talking about clean slating. If you started from scratch, if you rebuilt from scratch, would your portfolio be exactly the same? And if it isn't, if you're looking at your portfolio and you're thinking, no, it would be totally different, why? Why is that? If we go back up to exactly where I started with this entire presentation and talking about Paul Andreola saying that this is a huge advantage, a significant advantage that retail investors have over large institutions, and yet we rarely use this advantage, I think it really, in my opinion, culminates down here in my presentation where Ian Castle is talking about clean slating, because us as small average retail investors, this is our advantage. We can literally sell our entire portfolio and build from scratch tomorrow if we want to. And why not? If you're owning a stock that you don't believe in, if you're owning a stock you don't have conviction in, if you held a stock too long and you didn't use a stop loss and you're just wondering, why am I holding this stock? If you're holding a stock that is, too high in share price, valuation is through the roof, and you're losing sleep at night thinking, when is it going to crash? We have the ability to do a clean slate. And Ian here says it keeps them honest given the constraints of illiquidity and holding on to half convictions ideas. And it aligns well with this snippet. Basically, I love this. This is a snippet from a larger conversation from Ian, but it basically tells about how this music producer is producing a hit record, and if he wants 10 songs on the record, he records 25, strips it down to the best 5 and 6 you can't live without, and then only adds the ones that make the album better. This is the same way that I build a portfolio. This is the same way that Ian says he builds a portfolio. I would say I do more than 25. I might research 500 stocks to find my favorite 5 or 6, but you get the idea. And why are we holding half conviction stocks? As small retail investors, one of the significant advantages we have is to be able to clean slate, build from scratch, have a look at your portfolio. We have this opportunity, I think, twice just in 2025. I think we have it right now in a very weak market to do a clean slate. And I think we're also going to have another chance come tax season time in about mid-November to mid-December. I think we're going to have the ability to do that. So there's a lot of investing psychology mistakes out there, enough that I should, probably have another live stream or make another video to talk about them all, because I do not have time today. There's just too many, right? But think about it. If you're holding a stock and you're not sure why anymore, and it's something you'd like to sell or trim or de-risk or whatever, is any of these, investing psychology issues something that is affecting your decision making in your portfolio? I think that's a great conversation to have someday, right? For all the stocks that I cover, if you want to join the Discord, you have the option to either go through Patreon to join my Discord, or you can now go through Substack and join my Discord, or you can just join Substack and not join my Discord. So I have multiple ways to access my platform where I am researching and talking about the best microcap stocks just about every day, at least 6 days a week. I have a private live stream on Sundays. I introduce new stocks at least 1 week before they go public. And this is pretty much what I offer on my platform. Go check it out, commonsenseinvesting.ca. And I'm done with this presentation. I am going to get to questions, answers, comments, whatever else you want to talk about. Now is the time, because I'm done talking for now. All right, that was my fake coffee. This is a coffee made of barley grains or something like that, because I don't want to over caffeinate myself anymore. So it's called Cafe Libs or something like that. I don't know if it's good yet or not. I'm still undecided, but it is what I'm doing to try to reduce my caffeine intake. I love the taste of coffee. I don't know about you, but Mind Technology earnings. In today's presentation, you mentioned buying dips of stocks you like. Would Mind's recent dip be an example of a dip that you would like to buy? Look, I'll be honest with Mind. When they reported their weaker backlog, and if I can pull up their share price here again, if I could find it, where did it go? Where did it go? Yeah, this one here is Mind. I honestly thought it's recently, this has been such a volatile stock that I thought Mind would be going down here back to $7 or $8, like $6, $7. I thought Mind would be going down here. I'm super happy. It seems to have stalled out here at about $8.30, $8.40. I'm actually surprised today. I think it was up 4 or 5%. That's great work. What happens with these stocks, especially the US stocks, like Mind went through this preferred shareholder conversion, and what you get with that is a lot of weak shareholders. And I hate the whole stupid COVID time experience of, strong shareholders hodl and weak shareholders sell, right? But in reality, this does happen with certain stocks, and you could see that here, where Mind Technology had a lot of weak shareholders. Every time share price went up, people were selling. I think a lot of that was due to this preferred shareholder base. So I am surprised it seems to be holding this price right here. I was thinking definitely about buying more if it dropped down into these levels. It might still do so. We shall see. I mean, like I said, I am waiting for tax loss, tax season coming up, where some people sell for capital gains, other people sell for capital losses. I think Mind will actually get both capital loss selling from people who bought too high and capital gains selling for people that bought low and have made a lot of money on this stock. So I'm curious to see what Mind does for share price in November and December, personally. Yeah. So basically, I'm waiting. And, that is where I like having patience. If I'm not sure where share price is going to go, as a retail investor, I could buy today, sell tomorrow, wait a day. It doesn't really matter. That is the nice thing. That is the advantage that we have over institutions. We always get this mindset, or I find a lot of people do, where it's like buying a stock is like having a baby. It's a huge decision, and all this stress and all this anxiety. I could buy a small position today, or I could add a little bit today and change my mind and sell it tomorrow. So it's definitely, something to think about. I know it's too big now, but Kraken exploded again, my first 100%. And I think I started my DD after one of your videos. So appreciate your videos. Good work. Absolutely good work. And I know people get frustrated with me because one of the things you'll notice on my channel is that the stocks I was talking about in 2023, 2024, I don't talk about them anymore, right? And people think, well, why? A lot of other channels just they cover 3 or 4 stocks, and they continue covering those 3 or 4 stocks for their entire life cycle of the stock or the company until it gets bought out. That's not typically what I do in microcap stocks. I find my good stocks. If I get it right, they grow to a huge market cap. I make a pile of money, like what Kraken Robotics did, right? I introduced Kraken Robotics at 28 cents, 30 cents. It's now over a $4 stock. People have made an absolute fortune on Kraken Robotics. It's now $1 billion company. It's got institutional investment. I don't have that advantage that Paul Andreola was talking about anymore. So I talk less about these stocks and I go out looking for the next Kraken Robotics, right? That's typically what I do. So I'm not saying it's a bad company at all. It's just as these companies get large, as they become successful and microcap investors have made their money on them, it's kind of time to pass the torch and go find the next tiny company, right? That's what I do. And that's hard, but it's been very successful for me, right? So, and dural ribbon cutting at Quonset RI last week should be a good thing for PNG later in 2026. They got lots of good things coming up. The main thing from Kraken Robotics, and maybe if I make like a final video for Kraken, is probably what I would do is as a farewell to Kraken Robotics as they get to be too large of a company for this channel, is basically what have we learned? What have we learned from Kraken Robotics? If you own Kraken Robotics and you made money on Kraken Robotics, have all your other stocks been as successful as Kraken Robotics? If not, then why? What did Kraken Robotics do that was so different? How did we discover it that gave us enough conviction, like Ian Castle was talking about, to buy and to buy a large enough position that when it went up, that we were making significant amounts of money. And as it kept going up, we just kept holding, right? Because some people sell at the wrong time. Now, personally, I sold most of I still own a little bit of Kraken. I sold most of my Kraken Robotics shares at, I think, close to $3. Now it's over $4. So maybe I made a mistake by doing that, but I also took that money and invested it in another stock, another tiny little company that has now also made significant profits. So I'm not too worried about selling a company like Kraken Robotics. If I could find one that is going to also go up significantly, my portfolio gets diversified, my risk gets reduced, and I'm still making money. But the question for me that I would like to get people thinking about, Kraken Robotics, Gatekeeper Systems is up significantly, NTG Clarity Networks, whatever your Zoom Technologies, whatever your most successful stock is in your portfolio, go take a look, go backwards, right? Do an investigation. What did you get right? What did you get wrong, right? How can I apply this to the next stock? What is the next Kraken Robotics, right? Why does he need to talk about gold? It's his channel and he could do it. Yeah, I cover a couple gold stocks. Q2 earnings season is supposed to be over. We also have Orbit Garant Drilling coming up, right? So I like that stock. That's a gold stock. I also have interest in Dynacor. I don't know why. That's the most dramatic stock in the world. They're constantly fighting with their largest shareholder. But I don't know why. I think it's a personal bias where sometimes I like the drama. I like seeing a large shareholder fighting to improve the company. And maybe that's what I like about Dynacor is they're kind of the ugly duckling with this, shareholder that's constantly pushing them to be better. But as far as gold stocks, those are the only two that I cover is Orbit Garant and Dynacor. I'm not a huge fan. I actually have a building a category because we have quite a few oil and gas and mining stocks popping up on my Discord. I don't cover any of them. It's basically all member researched companies. But there's enough of them popping up that I think I'm going to form a category just for oil and gas and mining stocks. But me personally, that's not really my niche. I don't really talk about those. I'm heading to Toronto and visiting Permatech, ZTE next Thursday. I'll be letting them know that I'm watching them like a hawk. You should be. You should be watching them like a hawk. That went from a clear-cut winner to a lot of confusion around ZTE recently. So I know there's a lot of shareholders, people that like that company. I've never really covered them too much. Did I check out the high tide quarter? It was positive for a change, actual profitable for the first time this year. Yeah, fantastic, fantastic. I'll admit, this is high tide. It's funny you bring that up. Fascinating company. And when I talk about, I'll pull up their chart. When I talk about loving microcap stocks, it's because even after all this time, I'm never 100% correct. We all make mistakes. We learn from those mistakes. You know, I pointed out ADF Group, drx.to, and this is another one for me. So I have a love-hate relationship with High Tide. So on my top 5 microcap stocks of 2025 video, back here in December, I introduced High Tide, and I introduced them, I think it was at a share price right here. I think this is when my video was at. It was roughly right around $4, might have been $3.83. Let's say $4. This is when my video came out introducing High Tide. This is also when I actually decided to become a shareholder, was right here around $4. I was like, okay, it's off the top here. They're coming down in share price. I already like the company. I'm going to become a shareholder. So I've got a video out on High Tide back here. I become a shareholder on High Tide back here. And then what they did, this absolute massive plummet here, was their acquisition in Germany fell through, and they completely forgot to run their operations in Canada. This was a very simple investing thesis for me. You're building retail stores in Canada, and focus on those stores, make sure those stores are better than the competition, do it over and over and over again, and you're going to be a great company. And they reported really poor earnings, and they lost focus in Canada, and share price absolutely crashed. And this guy, I think I gave up. I think my patience lasted till around here. When I saw them talking about Germany again, another acquisition again, and they were threatened with a hostile takeover, and I'm like, I'm just cutting bait. I've had enough of this drama. I bought around $4. I sold around $3, and basically took them on my list. I put them in what I call my penalty box. Well, now they finally did get that acquisition in Germany. They're finally getting good earnings again. They're focusing on their stores in Canada again, and they're right back up to this $5 share price and making people money. So absolutely congratulations. It is fascinating to me, though, that, you know, the whole holding long term versus trading or buying and selling, and I say that sometimes you can get it wrong. This is one stock that I got wrong because I was bullish on them here. I was bearish on them here. And now they're succeeding again here. And so I could not have possibly done probably a worse job of buying high and selling low than what I did with High Tide. And I mean, I could have bought here. It could have been a little bit worse. I didn't. But still, I bought in around here and I sold in around here, and now they're successful. So it's weird for me because congratulations. I did make a video on this company here, and I was, you know, bullish on this company when they were doing the right things, and they're up. So yay me. When I go make my end of the year video, looking back on the year to see, you know, how my picks did, High Tide is going to be a winner. It's going to be a significant winner. Not for me personally, though, unfortunately. So learning experience, and it's not so much a learning experience. It's still not my favorite company. I still don't agree with everything they did through this share price crash. I'm still concerned about their operations, and basically I lost conviction in here. And it's not so much that I got it wrong. Again, I took this money, I invested it in what I thought was a better company, and I have now made money in that other stock because I took this cash and put it in what I thought was a better company. And that is, again, one of the advantages that we have as a retail investor. But at the same time, I'm kind of upset that they're winning because I sold down here. And then at the same time, I'm kind of happy that they're winning because I made a video on them here. So it's kind of a win-win for me at this point, but that is High Tide. I did see their earnings. I like their earnings, and they're starting to rediscover why I was interested in them in the first place. If they can continue doing that, I mean, largest retail cannabis operator, as far as like retail store selling the actual product without any of the risk of actually growing the flower. I do like that business thesis, right? So High Tide still has potential. Do you give any estimate of your historical annualized returns with your current strategy? Well, not really, because what I do is I provide, I do on my Discord, right? People know when I make money on my Discord, But as far as publicly on YouTube, I make a beginning of the year video and I make an end of the year video. And that way I keep track of all my YouTube videos. So I believe when I did the podcast on Value Bridge, basically I said, look guys, I'm not making these videos for my own health. If you look at all the videos that I made throughout 2024 and you look at their current share price today, the average return is 78%. So and some of those videos weren't made until December of 2024, and my average return is 78%. And that's just from my publicly released YouTube videos. And that's just me reducing down to 20%. I've talked about this before. I'm not a stock picker. I just like communicating good companies to good investors. And typically I will take 100 companies, find my favorite 20 and make videos on those for YouTube. And so far that's done very well. I bought a bit more earlier when it was below $3. We'll see if they can even repeat it. I was thinking about the same thing. I was actually going to buy High Tide below $3. Probably should have. I didn't actually want to reward them for poor execution and poor performance, so I decided against it. That was a mistake. Buying High Tide below $3 when the technicals shifted and they started going up again, that was a smart move. Smart investment right there. Good work. No news from Roof. That's North Star Clean Technologies. We'll see about how operations go. Yeah, no news. This is a pre-revenue company about to become revenue producing, and they're 3 months late in becoming a revenue producing company. So share price is down a couple pennies. The pre-revenue stocks, though, I only cover one pre-revenue stock per year. Anybody who knows me knows that I'll use the word hate pre-revenue stock, not dislike. I will use the word I hate pre-revenue stocks. North Star Clean Technologies is just one more example of that. It's the only pre-revenue stock on my channel this year. They had one thing to do, and that was produce revenue. That's it. That was my only goal. Just produce revenue this year. It's now September 15th and still not producing revenue. So, man, the pre-revenue stocks are just slow moving, high anxiety, just absolutely not my favorite. But hopefully they succeed, right? That's my issue, is when to sell. I have an average price of 53 cents for GSI and I've not sold a share. Some days I think I should sell half my position. Other days I think GSI will be $3, $5 or buyout. You know, again, not financial advice. I don't know anything about you. One thing that I typically do myself personally, though, is I look at valuations. It's not about when to sell. It's about what else are you going to buy. Right? It's that opportunity cost thing that I discussed earlier. And that's why you'll see I'm always smiling. And I could talk about a stock like High Tide and like I bought it at $4 and I sold it at $3. That sucks. And you think I'd be super pissed off. But when I used that cash to go buy some other stock at $3 and it went up to $4, I mean, it's all about opportunity cost. So like my question to you is, you know, for people that have, and this is the difference sometimes why it's impossible to give any kind of financial advice, because if you're a large capital investor, if you're making millions of dollars per year and you don't have to worry about money and you're just constantly flooding cash into your microcap account, coffee can every damn stock. Why would you sell, right? Because you don't need the cash. You're pick the best companies, put them in a coffee can, forget about them for 20 years. But when you're an average retail investor and you have a limited amount of cash, the question really becomes, how are you going to get the biggest returns, the most amount of money with that limited amount of cash you have? So it doesn't become about whether or not you should sell Gatekeeper Systems. It's about whether or not you have another company that is better than Gatekeeper Systems, that is cheaper, that is performing better, that you think Gatekeeper can maybe go up 20% in the next 12 months, and this stock can go up 100% in the next 12 months. If you were a small retail investor with a limited amount of cash, that's really what we need to think about here, right? It's not about selling one stock. It's about what are you buying? And that goes right back to what I just showed you with Ian Castle talking about a clean slate. If you started your portfolio today with absolutely no stocks in it and nothing but the cash that you have today, would you rebuy Gatekeeper Systems or would you go buy some other stock? That's just a question. Not going to give any answers. I'm just going to answer a question with a question using advice from Ian Castle, as I normally do. Everything I say about microcap stocks, I swear, I could sit here and talk for an hour and I will sit down and I will find out that somebody else gave this same thing that I'm saying 6 months ago, and I'm just regurgitating it back to you. It's amazing that there's no new information. It's just re-paraphrasing somebody else's information. So everything I just said basically came straight out of the Ian Castle playbook, right? So I'm done. I'm an hour and 5 minutes into this live stream. I'm done all the comments, questions, concerns. I appreciate it. Thank you for watching. It's a Monday evening. You could be absolutely anywhere. You're here with me talking about microcap stocks. I absolutely love it. Good luck investing. More so than that, good luck researching, finding the best stocks right now as we have a little bit of slowdown, this little September slowdown before we hopefully get a little bit more of a bull market later in the month. And I hope to be here to talk about it with you. So thank you, and we'll see you next week.